Hi guys, what's up? I hope all of you are doing great. So welcome to the fifth fast track batch of our CA final audit. I hope all of you are doing great and excited for today's batch. If you can hear me, if you can see me, I would love to know in chats that whether my voice is audible to you, is my video visible to you, and would love to know more about you, from where you are, what's your name. You can share your details in the chat box if everything is fine. Yeah. So the chat box is on. You can share your whatever you want to share. You can share in the chat box your name, from where are you, would love to know about you. Yeah, cool guys. Yeah, so Hardik is saying yes sir, we can hear you. Ramchandu is also saying good evening sir. Good evening Ramchandu, hope you are doing great. Hi Kopichand. Great. So I hope you are doing great. And today. Okay, so Deena Rachel David is from Kerala. Great. Bangalore. Nice to hear that. Nice to know that. Lakshmi Ji is from Chennai. Great. So it's amazing. It's amazing to catch up with everyone right now. And welcome to the batch number 5 of CA Final Audit. So there is one common game in North India that is called Tambola or Housey. In that we have Lucky 5. Okay, so I call this the Lucky batch because in this batch the number 5 is there, and I'm sure all of you who are attending this batch will do wonders in audit. And before I actually begin this batch, I want to just give a small introduction about me. So my name is Shubham Keswani. I am a chartered accountant by profession. Now let's talk about why audit, why we are actually studying this subject, and why I am so passionate about it. So I will give you a brief about myself. So I graduated, I did my BCom honors from Shri Ram College of Commerce, and while doing the course in my third year, I cleared my CA intermediate with an all India rank 29. And when I cleared that exam, I secured 66 marks in auditing. Yes. So the subject in which many people tend to struggle in 40s and 50s, with the blessings of the God, I got 66 marks. And during my CA final journey also, I did this preparation of audit completely self. I relied on the ICI study material, devised my own memory techniques, and was able to get 71 marks and cleared my CA finals with an all India rank 8. So my only purpose of starting this batch or starting this guidance related to auditing was that whoever is taking this guidance is also able to achieve this dream. He or she is also able to realize that this is something which is possible. So let's begin this journey. I'm really happy and excited to begin this journey with every one of you. I am sure that you will get lots of fun during this journey. So before beginning actually with the course part, I would just like to give you a brief about this subject, how this subject looks like, what will be the topics that we'll be covering in the class, so that you get an overview of the subject before actually we start with the today's main class part. Great. So Suhani is from Gujarat. Great, Suhani. Right. So let's start with it. So let's talk about it. CA final auditing. So like all the theoretical subjects, this subject is also divided into two parts when it comes to your question paper. First part consists of the descriptive part. The descriptive part will account for around 70 marks of your paper. Got it? So the descriptive part will account for 70 marks of your paper, and the MCQ part, which I feel is the game changer part, it will account for 30 marks of your paper. Got the point? Yes sir. So the descriptive part is for 70 marks, the MCQ part is for 30 marks. Will the material that will be provided to would be enough? The answer is yes. The notes that will be provided, they would be enough for you to crack the MCQs, to crack the descriptive part. Similarly, the question bank, it is a compilation. So that's why we have named it as a compiler. So it's a compilation for the past few years, or past, you can say 5 years, 6 years of RTPs, MTPs, suggested answers of ICI, even the study material questions, everything has been incorporated in that. Now, what about MCQs? So ICI had released case scenario booklet of MCQs. All the MCQs of that booklet have also been compiled, chapter wise, and integrated case scenarios have been put in that booklet. Similarly, all the MCQs of the past RTPs, MTPs have also been incorporated in that booklet. So overall, you can say your material is enough for you to score really good marks in the field of auditing. So let's talk about it. The descriptive part I have discussed, the MCQ part I have told you. Now, since it's the first class, before we jumped onto the main course of CA Final, I want you to first understand what is auditing all about? Why are we even studying this subject? So let's understand it. Why CA final has a subject called auditing? So there are different companies in India. A lot of companies are there. Reliance, Asian Paints, TCS, Infosys, HDFC. A lot of companies are there. You may be holding shares in one or two of such companies. I may be holding shares in such companies. But do we have this capacity that we can go and check the financial statements of each of these companies? Basically, the gap lies in that part that the company is being run by a different set of persons and the ownership in that company is held by different set of persons. So the people who are actually running the company, who are managing the company, they are the ones who are preparing the financial statements, right? When they are preparing the financial statements, whom do they present the financial statements to? To the owners who have invested their hard-earned money in the company? Answer is yes. Can they try to manipulate the financial statements? Yes, sir. Because we all understand a lot of times the managerial remuneration is linked to the profits which are earned by the company. There can be a malicious motive that the managers can try to inflate the profits, inflate the revenue so that they can earn higher remuneration. The answer is yes. So the owners may not always be in a position to rely on the management. So how will they actually get to know that the financial statements that have been prepared by the management are something that they can rely on? There comes the role of a chartered accountant, an auditor. An auditor steps into this part and he actually helps the owners. He represents the owners. He goes to the management. He asks the management to share the financial statements. He applies the standards on auditing. He checks the financial statements. And then he tries to give an opinion that yes, financial statements are fine. They give a true and fair view. They can be relied upon. This is the major concept of auditing. And one essay that gives us an essence of auditing, what auditing is all about, it helps us deep dive into various concepts of auditing, is essay 200, which is what we are going to discuss in today's class. Most of you, I assume, would have definitely covered it during your CA Inter or CA IPCC. Most of your concepts you may find to be repeated one, but these are the concepts which I feel we should take up in our first class so that we can develop a beautiful base for all the coming classes and we are able to develop a better understanding. So who all are there with me to start with essay 200? Set the chats on fire. I would love to know. And then we are going to start and begin with this wonderful topic of essay 200, overall objectives of an independent auditor and conduct of audit as per standards on auditing. Right, so who all are there with me? Just type essay 200 in the chat box so that I get to know that you are ready. We are going to begin with this amazing topic and yeah, we are going to take it forward. Yes, sir, we are there with you. Great. I hope all of you got the concept. Why we need to do audit? Yes, sir, we got the concept. Now let's begin with essay 200. Essay 200, what's the name? So essay 200, as you can see, there is a very beautiful thing attached in this essay. Essay 200. You know why is this essay 200? That is 200. There could have been even a single zero. The answer is yes. But still there are two zeros because it talks about two things. This essay is not limited to one thing. Had it been limited to one thing, there would have been only one zero. But there are two zeros. What are those two zeros? So two zeros have two different meanings. First of all, it talks about two different things. What are the two different things? First of all, it talks about the overall objectives of independent auditor. This is the first part. And the second part is conduct of an audit in accordance with standard on auditing. This is the second part. This is how you will remember it. Essay 200. Assume these are the two O's. O's means O and O. Overall objectives. Whose objectives? Of an independent auditor. So now we know how the auditor looks like. Is he a biased auditor? Is he someone who will act under the influence of some other person? The answer is no. This auditor is an independent auditor. Independent auditor means independence not only of mind, independence of appearance. He will not get into undue influence of any other person. He will have that objectivity. He will have that integrity to carry out the audit by himself. So how should be the auditor? The auditor should be an independent auditor. So overall objectives of independent auditor, and how should the audit be conducted? It should be conducted as per the standards on auditing. So first of all, it talks about how should be the auditor. He says independent auditor. And independent auditors, there are some objectives that he tries to achieve during audit. And second part is how the audit has to be conducted. Just say it again with me. The audit has to be conducted in accordance with standards on auditing. In short, you can call it UIA CASA. Sir, what is this UIA CASA? UIA. UIA CASA. CASA. UIA CASA means overall objectives of independent auditor and conduct of audit in accordance with standards on auditing. So first, let's try to understand what is this something that auditor is trying to achieve. In conducting an audit of financial statements, when the auditor begins to conduct the audit of financial statement, let's understand what are the overall objectives. The first objective is to obtain a reasonable assurance. What is reasonable assurance? Reasonable assurance is the high but not absolute level of assurance. It's like being comfortable. I'm not sure about it, but I'm somewhere comfortable. Yes, there is something right. I can't be sure. I'm not giving you a surety that it is right, but I'm giving you a sense of comfort that yes, I'm reasonably sure. I'm giving you high level of assurance. Do it with me. I'm giving you a high level of assurance, but I'm not giving you an absolute assurance. Absolute assurance is like 100% guarantee. Everything is perfectly all right. Can auditor do so? The answer is no. And why the auditor cannot obtain an absolute assurance? The answer lies in the concept of inherent limitations of auditing. There are certain inherent limitations of auditing. You must have studied in CA intermediate. What are the inherent limitations of auditing? Let's discuss about them. Why the auditor can't obtain absolute assurance? Why the auditor can't give a guarantee that the financial statements are all right? Why the auditor can't do it? Because of the inherent limitations of auditing. Let's talk about the inherent limitations of auditing. Just get on the ride with me. What are the inherent limitations of auditing? Inherent limitations of auditing are the reasons because of which the auditor is not able to give an absolute assurance. Still, he has to give some high level of assurance, but he can't give absolute assurance because of four major reasons. And these four reasons are called inherent limitations of auditing. These are the limitations which are there with the auditor. He can't do anything about it, but yes, he has to live with it and you can't do anything about it. First is the financial statements. What is the audit all about? What do we actually check in the audit is the financial statements. So the first is the nature of financial reporting. So what is that unique thing about financial reporting that it is creating such limitation? You must have prepared accounts during your intermediate, during your foundation. Just watch it here. Just watch it here. Put your attention here. Yeah. You must have prepared accounts during your intermediate, during your foundation, CPT, and you must have realized that in a lot of cases, you have to make certain estimates. Even during your articleship, you would have had some conversation with the management of companies wherein they would have made some estimates and you must have checked them. So when there are estimates, for example, provision for expenses, provision for actuarial liabilities of employees, when these estimates are involved, there is some judgment involved. No judgment can be 100% perfect. No judgment can't be 100% right. Nothing can be 100% perfect. No one can be sure whether their judgment is right, 100% right or not. When the nature of financial reporting involves management to make such judgment, involves management to make such estimates, how can we say that the financial statements are all right? How can we give the absolute assurance? Are you getting my point? Yes, sir, we are getting your point. So that's something that it's trying to convey, that the preparation of financial statement involves judgment by the management in applying the requirements of applicable FRF. What do we mean by FRF? What is FRF? FRF stands for Financial Reporting Framework. Just for your ease, take it like that. It's just like your Schedule 3 or your AS Ind AS. What does Schedule 3 AS Ind AS tell you? They tell you how the financial statements have to be prepared. They tell you how the profit and loss account has to be prepared, how the balance sheet looks like. They tell you how much notes to accounts and a disclosure of accounting policies has to be given. That is your FRF. As the name suggests, Financial Reporting Framework. How the financial statements will be reported, how the financial figures will be reported, how the financial statements will be prepared. Who tells us how they have to be done? Say it after me, the Financial Reporting Framework. Right. So when the financial statements are prepared as per Financial Reporting Framework, it involves the use of judgments by the management regarding some facts and circumstances of the entity. Example, accounting estimate. So the nature of financial reporting is such that it involves some judgment by the management. So this is all about the financial statement part. not in the hands of auditor. Now let's talk about the nature of audit procedures. So first reason is related to the financial statements, the substance that is getting audited. Now let's come to us. We are the auditors who are performing the audit. What do you think can be our limitation? There can be a lot of limitations. First one, let me tell you. As an auditor, I can't go and do in-depth checking of everything. In a year, if there is a big company, it will have thousands and lakhs of transactions. Will I be able to check each and every one of them? It's a simple question to you. Answer me. Will I be able to check each and every one of them? You don't need to type it on the chat box. Just nod or say something. Yes or no? Of course, I won't be able to check each and everything. Yes. Plus, what do you feel? Am I too dependent on the management for providing me the information regarding the financial statements? Answer is yes. I'm too dependent on the management. Can it be a case that management may not provide me the complete information, may not provide me the complete details about the facts and the circumstances? The answer is yes, it can also happen. So as an auditor, I am dependent. As an auditor, I can't do in-depth checking. Plus, if there is a case of management fraud, do you think as an auditor who is not having any investigation powers, I'm just going and checking the financial statement, checking some documentation, nothing else. Do you think without having some special powers of search, will I be able to detect a fraud? The answer is no. So if there is a misstatement due to a fraud, do you think will I be able to detect it? Agar in the financial statements there is a material misstatement due to fraud, will I be able to detect it? The answer is no, because I don't have the powers of investigation during audit. Auditor is a watchdog, not a bloodhound. You would have heard about this line a large number of times. And this is the major reason, this is the major nature of auditing, because of which auditor can't give an absolute assurance. Let's read about it. So there is a possibility that the management and others do not provide a complete information relevant to presentation and preparation of financial statements. So a lot of time you will read PPFS. What do you mean by PPFS? Preparation and presentation of financial statements. So there can be circumstances that management or others are not providing me the information. Plus, fraud may involve sophisticated and carefully organized schemes which are designed to conceal it. So when there are such schemes which are designed only with the purpose to conceal it, who am I to detect it? How will I be able to detect it when it is hidden in such a manner? You're getting my point? Yes, sir. So audit is not an official investigation into any alleged wrongdoing. I don't have any special legal powers like such. So this is the point that you need to remember. The nature of audit procedure is like that. So first of all, the nature of financial reporting, then the nature of our audit procedures, and third is maintaining a balance between benefit and cost. Just do this proper dance like me. Yeah, you will enjoy it. Enjoy it. So we have to maintain a balance between benefit and cost. What this balance is like? It's simple, na? There is a benefit of auditing. What's the benefit of auditing? Getting an assurance. Getting an assurance, yes, management has prepared the financial statements in a perfect manner. But there is a cost involved. No audit is done for free. The officials, the auditors, they are going to spend their time. They are going to spend their money. Everything has to be recovered from the company that they are auditing. What do you feel? If they will be spending whole year in auditing the transactions, will it be beneficial for the company? Whole revenue of the company will go into the expenditure of auditing. Getting the point? So every time you are putting some controls, you have to maintain a balance between benefit and cost. As you have to maintain a balance between benefit and cost, auditor can't be expected to put in a lot of time and a lot of resources to detect each and every material misstatement. Second thing, the information is expected to lose its relevance over a period of time. For example, let's take an apple. If you buy an apple today, okay, or let's say you buy a banana today, I think you will relate more to it. If you buy a banana today, you buy a proper yellow banana. Just buy it and keep it on the table and leave it for, let's say, 1 month. Do you think after that 1 month, it will have the same value as it had 1 month before? Tell me. The answer is no. The banana will lose its value as the time passes. And the same game is the information that is available with the management. As the time passes, the information tends to lose its value, and similarly, as the information tends to lose its value, the auditing is done towards the end of the year. So the information that was there in the beginning of the year will not have the same value at the end of the year as it had in the beginning of the year. So that also becomes a limitation on auditing. So this is all about timeliness of reporting and balance between benefit of cost. relevance of information and thereby its value tends to diminish over a period of time. As the time passes, the value of information diminishes, and there has to be a proper balance between the relevance, reliability of information and the cost. Because of the inherent limitations of audit, there is an unavoidable risk that there can be some material misstatement in the financial statements which may not be detected even though the audit has been done as per the standards on auditing. Even if we are doing the audit as per the standards on auditing, still some misstatements in the financial statements which are material in nature, they may not be detected. Getting the point? Yes, sir, we are getting the point. And last but not the least, there are certain areas, there are certain assertions, subject matters in which case the auditor's ability to detect the material misstatement is highly affected by the inherent limitations. Yani, these are the areas, these are the pain points of an auditor. You're getting the pain points. Like these are the areas where it would be most difficult for the auditor to detect a material misstatement. First one, fraud. Easy to get. A management is involved in the fraud. Had an employee been involved in fraud, the manager would catch him. But if the manager is involved in fraud, who would catch him? You're getting, the gatekeeper is the one who is stealing from the house. See, if an external burglar comes in the house, the gatekeeper would catch him. But if the gatekeeper is the only one who is stealing from the house, who would catch him? And that's where the management fraud becomes very difficult to detect by an auditor. So first point that we need to understand, fraud, particularly the one which is involving the senior management or collusion. What do we mean by collusion? Simple to understand. If a single person is involved in fraud, you can easily catch him. But if two people get together and they commit a fraud, it is not easy to detect. Because two people are involved, two brains are involved. When two brains are involved, they are much better in a position to create a larger magic together. Getting the point? Yes. So fraud, which is specifically involving the senior management or collusion. Now, whenever we'll talk about fraud in auditing, just understand this fact. It will also involve a related party. As I told you, collusion. So collusion happens when two parties are there. So one would be the entity, another would be the related party. And it can happen a lot of times that you are auditing the entity and in the end you get to know that the management did not disclose a related party to you. So there are two things when it comes to related party. First of all, knowing who are the related party, what are the related party relationships, and second, once you get to know who are the related parties, then you dive deeper and get to know what are the transactions with the related party. So be it the related party relationships or the transactions, it is very difficult to determine who all are the related parties. We have to sometimes depend on the management representation, management listing of the related parties to actually understand who are the related parties and what have been the transactions with them. So first point was fraud. With whom are we generally tend to conduct this fraud? Related party. So remember, the second part is related to the related party. The existence and completeness of related party relationships. First of all, the relation. And once you develop that relation, what do you have? Transactions. So relationships and transactions. Are these 2 points clear? Fraud and related party. Yes, sir. Third point. When you are doing a fraud with related party, just type in the chat box right now. When you are doing a fraud with the related party, are you complying with the laws and regulations or you are not complying with the laws and regulations? Just answer me right now. When you are doing a fraud with related party, are you complying with the laws and regulations or you are not complying with the laws and regulations? Answer me in the chat box right now. Very good, very good, very good, Vishnu. Very good, Sanya. Very good, Ram. Very good, Varun. Very good, very good, very good. Great. So we are not complying with the laws and regulations. This is the flow that you need to get in. So here comes the third part, the non-compliance with the laws and regulations. Let's understand it. We have learned it. We have known that the third point is non-compliance with laws and regulations. But how come there are inherent limitations? The inherent limitation is that an entity may be required to comply with hundreds of acts. I'll give you an example. As an auditor, I may be checking the compliance with Income Tax Act because I will check the TDS challans, TCS challans. I will check whether the income tax provision has been properly created or not. I'll also be checking the compliance with Provident Fund Act, ESI Act, such acts which are having a direct impact on the financial statements. I'll be checking the compliance with them. But what about the acts which are not having a direct impact on the financial statement? Sir, give an example. A simple example would be Child Labor Act. How would I know that in the factory there is no child labor? I can't be sitting 24/7 in the factory to see, or he is 14 years older, he is more than 14 years older, he is less than 14 years older. As an auditor, this is not my work. So this is just one example. There are so many acts. Environment Act. I can't be sitting and checking the pollution emissions 24/7, right? So checking the compliance with laws and regulations is again something which can't be done fully checked with by the auditor. So this is the third point where you need to understand that compliance with laws and regulations is also having a large impact by the inherent limitations, right? And last but not the least, simple. Let's recall it again. First point was fraud, specifically involving a management fraud or collusion. With whom did we conduct this fraud? First, tell me fast. Related parties. When we conduct fraud with related parties, it is a non-compliance with laws and regulations, and the company which is non-complying with the laws and regulations will face what? It will face penalties. It can also face prosecution. And when such company faces penalties and prosecution, do you think that the company will be able to grow in the long run? The answer is no. Its going concern will be affected. Any day the company can cease its operations. So the last point is future events or conditions that may cause an entity to cease to continue as a going concern. To cease to continue as a going concern, as an auditor, I can't give a guarantee that the company will continue as a going concern. This is also something which is out of my scope. So what are the four areas? Fraud with whom? Related party. Again, if we conduct fraud with related party, it's a non-compliance with laws and regulations. And the fourth point is, if we do so many non-compliances, again, it can affect our going concern. I hope these 4 points are clear. Yes, sir, these 4 points are clear. We have completed a big topic of inherent limitations of auditing just by talking to each other. So what is this topic about? We just need to remember the 4 points. First point is nature of financial reporting. The second point is who is auditing the financial reporting? Auditor. So the nature of auditing. Third point is balance between benefits and cost, timeliness of reporting. And the fourth point is there are certain assertions, there are certain subject matters which are mostly affected by the inherent limitations. What are those 4 areas? 4 areas start with fraud with related party, that is non-compliance with laws and regulations, ultimately affecting our going concern. I would request you to please go through this topic and let me know, is this topic clear? Have you learned these 4 points? If yes, we can move ahead. But tell me fast, can we move ahead? Do let me know. Yes, sir. We got the 4 points. Is the speed fine? Because the initial class, I also want to understand this fact. Is the speed fine? Clear, sir? Yes, sir. Great, sir. So is the speed fine? I also want a heads up on that so that we can continue and finish the topics. Is the speed fine for everyone? Please let me know in the chat box. If you feel that I'm going too fast, too slow, you can let me know. I would be happy to get in that zone. Perfectly all right. Speed is fine, sir. Yes, sir. Fine. Great. Cool. So we are just in the initial part of the chapter, okay? And we just covered one topic, finding a hint here. So it says, in conducting an audit of financial statement, we are just doing the first part here. What are the overall objectives? What are the overall objectives of an independent auditor? So in conducting an audit of financial statement, overall objectives are to obtain a reasonable assurance. Now we both know why reasonable assurance, why not absolute assurance? Because of the inherent limitations of auditing, right, sir? So to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement. Now this is the point to be stressed upon here. What is a misstatement? Then we'll understand what is a material misstatement. What do you think can be a misstatement? If I talk about misstatement, it is, you can say there is a something which ought to have been done, but what has been done is incorrect. Misstatement is basically, you can say, the financial statements have been prepared incorrectly. Now, how do I know that something has been done incorrectly? There must be a standard that this ought to have been done, but this is something that has been done. And when there is a difference between the two, I call it that there is something incorrect, that there is some error. That misstatement in the financial statements we can get to know if we know what should have been as per the financial reporting framework. Like Schedule 3 says that this should have been done like this. And this is something that the management has done. Now, what does financial statement comprise of? It comprises of 4 things. What are those 4 things? Amounts, classification, presentation, and disclosure. So if the amounts, classification, and presentation and disclosure that has been provided in the financial statements by the management, it is different from the amount, classification, presentation, and disclosure that should have been there as per the applicable FRF, I will say there is a misstatement. Misstatement is basically something which is incorrect. How can I say there is something incorrect? By comparing with the standard. What is the standard here? The standard here is the applicable financial reporting framework. Let's understand the meaning of misstatement. The misstatement meaning is given here. As I told you, misstatement is a difference. Difference between what has been provided by the management and what should have been provided by the management. What has been provided by the management? Difference between the ACPD. Everyone speak it after me. Difference between the ACPD. This definition will be useful to you in essay 450. When we'll do it at that point of time, I will tell you that we discussed it in the first class. So I request everyone to speak after me. Difference between the ACPD. What is ACPD? ACPD is amount, classification, presentation, or disclosure. Difference between the amount, classification, presentation, and disclosure of a reported financial statement item. Reported means reported by the management. This is something that has been reported by the management, and the ACPD, sir, ACPD, amount, classification, presentation, or disclosure that was required for the item to be in accordance with applicable FRF. So the difference is between 2 things. One is which has been reported in the financial statement, one which should have been reported as per the applicable FRF. What are the 4 things in which the difference can occur? These are the ACPD. What is ACPD? Amount, classification, presentation, and disclosure. How do misstatements arise? Based on the intention. If it's my intention to deceive the users of financial statements, I call that fraud. But if it is unintentional, I did not mean to deceive anyone, it's an error. So either it can be through error or it can be through fraud. But as an auditor, I'm not concerned. There should not be any material misstatement. So misstatements can arise either from error or from fraud. What is a misstatement? There is a difference. Difference between the ACPD, which has been reported in the financial statement, and the ACPD, which should have been there as per the applicable FRF. How can a misstatement arise? Tell me fast. It can arise either from error or fraud. It can be intentional or unintentional. Unintentional is error. Intentional is fraud. Simple. Yes, sir. We got the point. So now the auditor is concerned with a misstatement or a material misstatement. Tell me fast. No need to type. Just tell me. I'm listening. Auditor is concerned with a misstatement or a material misstatement. Sir, material misstatement. Then what is a material misstatement? Let's go to our CA inter preparation. In CA intermediate, we did one amazing accounting standard called AS1. What was that AS1 about? Disclosure of accounting policies. In that, we understood this term called materiality. When is an information considered to be material? If it is expected to influence the economic decision of an informed investor. What an amazing definition. I call an information to be material if that information can influence the economic decision. What do we mean by economic decision? A decision which involves finances, which involves money. And economic decisions of an informed investor. This investor knows everything, okay? And if some information can influence his decision, then I call that information material. That's a bookish definition of it. Explaining it through an example, let's say I'm investing in a company. I know that the company's revenue is 1,000 crore. 1,000 crore is the revenue of the company. I'm asking you a question. If it actually turns out that the revenue of that company was not 1000 crore, but it was actually 800 crore, will it impact my decision? First case. And the second case, the revenue was not actually 1000 crore, but it was 999 crore. Will it now impact my decision? What do you think? In the first case, it will impact my decision, or in the second case? Would love to hear your thoughts in the chat box. Let me know. In the first case, when the revenue was actually 800 crore instead of 1000 crore, will it impact my decision? Or in the second case, when it is 999 crore instead of 1000 crore, will it impact my decision? In which of the two cases do you think my decision is likely to be impacted? Let me know. First case or second case? Let's see who answers first. Everyone says that in the first case, it will be impacted. Everyone is going in the right direction, that in the first case, it will be impacted. In the second case, it will not impact. Who gave you this? Who told you this? It's a judgment, right? It's your judgment that you found that 1 crore is immaterial. A misstatement of 1 crore is immaterial. Yeah, this works. This is understandable. But 200 crore is something that can influence the decision of informed investor, and 200 crore will be considered to be a material misstatement, because you knew somewhere in your mind that it can influence the decision of an informed investor. So this is the definition of material misstatement. So now, as an auditor, what is my overall objective? To obtain a reasonable assurance that the financial statements that I am reviewing, they are free from misstatement or material misstatement. The answer is material misstatement. Misstatements can be there. There can be number of misstatements. But if there are material misstatements, then I am concerned. I am concerned only and only about material misstatements. And how can there be misstatements? I already told you, it can be either due to fraud, it can be either due to error. Got the point? Yes, sir. Now, once I have obtained a reasonable assurance that the financial statements are free from material misstatements, that means that the financial statements have been prepared as per applicable FRF, Financial Reporting Framework. So I can give my opinion. Why did I obtain the reasonable assurance? To present my opinion that the financial statements have been prepared in all material respects. See, I am not giving an absolute assurance. I am giving a reasonable assurance that materially, overall, the financial statements have been prepared as per applicable FRF. Now just answer me one thing. No need to type. Just tell me. Just look here. Once I have obtained a reasonable assurance that the financial statements are free from material misstatements, I have formed my opinion that the financial statements have been prepared in all material respects as per applicable FRF. What will I do with that opinion? Will I type and send that opinion to my friend on WhatsApp? The answer is no. Who appointed me as an auditor? The owners of the company, the shareholders of the company. And now it is my duty to present that opinion in the form of an audit report and tell them whether the financial statements give a true and fair view. So now I will report on the financial statements and communicate as per the required essays. What are the essays that tell us how we have to report? We'll study them in the class. Only thing that you need to understand that my overall objective was to obtain a reasonable assurance, form an opinion, and prepare a report on the financial statements. Is this point clear? Point A, point B. Are these 2 points clear to all of you? I hope each and every word, each and every line makes sense to you. You understand why reasonable assurance, why not absolute assurance? What is reasonable assurance? A high but not absolute level of assurance. Why are we obtaining reasonable assurance? Because of inherent limitations of auditing. What are the 4 inherent limitations? Nature of financial reporting that we are auditing, nature of audit procedures, balance between time and cost, and nature of financial reporting. And the last but not the least, there are certain assertions, certain areas which are adversely affected by the inherent limitations. Yes, sir. Great. Now let's talk about this another line and try to understand what it's trying to convey. And I will also take a short test for you, which will test whether you remember the things that you studied in IPCC or intermediate. In all cases, just read this line and understand. It will take me, just devote me the next 10 minutes and I'm sure you will get each and every word of this paragraph. Just read it with me. In all cases, when the reasonable assurance cannot be obtained and qualified opinion is insufficient, For the purpose of reporting to the intended users of financial statement, essays require that the auditor shall disclaim an opinion or withdraw from the engagement where withdrawal is legally permitted. Sir, we did not get even a single word of this line. What this line is trying to communicate? It says reasonable assurance can't be obtained, qualified is not sufficient. Then auditor will either disclaim an opinion or withdraw from the engagement, whatever he feels like. What is this? Cool. Let's have a short test. I'll just ask whatever I have discussed till now. I'm auditing a financial statement. Okay, sir. On the basis of audit of financial statement, I feel there is a misstatement. There is no misstatement. Let's say there is no misstatement in the financial statements. If there is no misstatement in the financial statement, what opinion will I give? Tell me quickly. I am auditing the financial statement. There is no misstatement in the financial statement. What opinion am I going to give? This is your first part of the question. Quick quiz. So this is the quick quiz. QQ. Tell me. I am auditing the financial statements. There is no misstatement. कोई misstatement नहीं है. No misstatement in the financial statements. What am I going to do? What type of opinion I am going to give? Which opinion will I enter here? Great, Vishnu Priya Prabhu. Right answer. The answer is unqualified opinion. Very, very good. Amazing. Now comes the second question. I am preparing the I'm not preparing. I am auditing the financial statement, and then I realize that the misstatement is there. Okay, now let's see who gets it right. Misstatement is there, but it is not material. It is not material. Then tell me, what kind of opinion will I give? What kind of opinion will I give? Clean or unmodified? Second case. I want the answer for the second case now. Everyone has given the right answer for the first case. Who gives this qualified opinion? Gopi Chand, wrong answer. You have to give unqualified opinion. Because unqualified is saying clean opinion. No issues. Okay, so financial statements, misstatement is there, but it is not material. In this case, write 2 and after 2, write the answer. What will I do in this case? Tell me. What happens in the second case? Great. Great Sohani, great Prasanna, great Vishnupriya, great. So in this question, again, it will be unqualified opinion. Why unqualified or clean opinion? Why unqualified or clean opinion? The answer is simple. As an auditor, I am fine with a misstatement, but I am not fine with a material misstatement. It is the material misstatement that affects me. It is not the misstatement that affects me. I hope you are getting this point. Right, sir. Now comes the third part. Third part. Now things will start getting amazing. Okay? Now focus on it. How come disclaimer is not going to come here? Right. It is not material. Very good. Third part. I am auditing a financial statement. There is a misstatement. There is a misstatement. Now, I am going to tell you. Now, I am going to ask you again. Just give me a second. I am auditing the financial statements. There is a misstatement. Now, there can be 2 scenarios. What can be the 2 scenarios? Either I have obtained sufficient and appropriate audit evidence, or I have not been able to obtain sufficient and appropriate audit evidence. Just focus here. Just focus here. I am trying to explain something. Okay? Sufficient and appropriate audit evidence I have obtained, and I have drawn a conclusion. I have drawn the conclusion. What conclusion I have drawn? The misstatement is also material. Okay? Material misstatement exists. What conclusion I have drawn? I have drawn the conclusion that the impact is not only material, but it is also pervasive. It is also pervasive to the financial statements. What do you mean by pervasive to the financial statement? That means it affects the financial statements as a whole. What do we mean by financial statements as a whole? The balance sheet and P&L, they all majorly gets affected by such misstatement. In this case, what opinion do we give in this case? I'm sure a lot of you may be remembering it from the IPCC days, but just to remind you, in this case, we give an adverse opinion. Just as the word, just as that feeling. Adverse. Adverse means very, 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 very bad. Adverse opinion would be our opinion in this case. Adverse opinion. We are going to give an adverse opinion. Why are we given an adverse opinion? Because the misstatement is not only material, plus it is also pervasive to the financial statements, and we have got sufficient and appropriate audit evidence to prove our fact. Right, sir? In case it is not pervasive to the financial statements, let's say this material misstatement is not pervasive to the financial statements, then we use a nicer term. What is that nicer term? It is called a qualified opinion. I'm just qualifying my report. Qualifying my report because the rent expense has been not disclosed fully. I'm qualifying my report because I feel this disclosure is not there which should have been there. I'm qualifying my report because I feel the provision for expenses is materially misstated. So basically there is a single item in the financial statements which is not affecting the whole financial statements. That means it is not something which is adverse. It is not adverse. It is just that some mistake is there which is material, and that's why I have to do something. So I use a better term which I call a qualified opinion. I hope you're getting that feel, right, sir? So here I will give a qualified opinion in case it is not pervasive to the financial statements. Now comes the second part. In the first part, I got an audit evidence to prove my conclusion, but in the second part, I have not been able to get sufficient and appropriate audit evidence. So there is a material misstatement. I have not been able to get sufficient and appropriate audit evidence, and the impact is also, I hope you are able to see my screen. Impact is also pervasive to the financial statement. I don't want any answer from you. I just want to give you a thought, and I'm sure after getting that thought, you will give me the right answer. I don't want a name of opinion. I just want you to tell me, what is an audit? Audit is basically an exercise where I have to perform my audit procedures, collect the audit evidence, and on that basis of audit evidence, I will draw a conclusion, and based on that conclusion, I will form an opinion, and I will report that opinion in my audit report. But in case I have not been able to get sufficient and appropriate audit evidence, if I have not been able to get audit evidence relating to the whole financial statements, if I don't have the audit evidence, I will not be able to form my conclusion. If I will not be able to form my conclusion, I will not be able to report. I will not be able to form an opinion. What do you think in that case I should do? Should I give an opinion or just raise my hands and say I can't give an opinion? Tell me. No need to type in the chat box. Just tell me. Frankly, what do you feel? In case there is something which is pervasively related to the financial statement, pervasively means it is affecting the financial statements as a whole, and I'm not getting an audit evidence for it. If I'm not having an audit evidence, I'll not be able to draw a conclusion. If I'll not be able to draw a conclusion, I'll not get an audit opinion. If I don't have an audit opinion, do you think I should actually present a report to the shareholders? The answer is no. I will just raise my hands and say, I am hereby not presenting any opinion on the financial statements, and that in technical terms is called disclaiming an opinion. I am not giving any opinion. I don't have any opinion to give. I don't have audit evidence. If there is no evidence, how will I even form my opinion? And this is the case of disclaimer of opinion, when there is a material misstatement, and that material misstatement is there. I don't have any audit evidence. The impact is pervasive to the financial statements. Yani financial statement as a whole are getting impacted. I will not give any opinion, and that not giving any opinion is called disclaimer of opinion. I'm disclaiming my opinion. I'm not giving any opinion. Did you get the feel of disclaimer? Tell me fast. Did you get that feel of disclaimer? Yes, sir, we got the feel of disclaimer. Another point. There is a material misstatement, but I don't have the audit evidence. But it is also not pervasively affecting the financial statement. It is just affecting a small item of the financial statement, not the financial statement as a whole. So again, it is not pervasive. In this case, what should I do? Should I not give my opinion? If I don't give my opinion, I'll be an idiot. The whole financial statements is not something that I have not got the audit evidence. I have got the audit evidence for other items. It's just that for one single item, I have not gotten audit evidence. The impact is material, but not pervasive. So when the impact is material, not pervasive, it doesn't matter you got an audit evidence or not, you will always give a qualified opinion. You will always give a qualified opinion. You got the point? Yes, sir. So there are 3 opinions in case you want to perform and modified opinion. What are the 3 cases of modified opinion? Sir, the 3 cases of modified opinion are: first one, material misstatement, pervasively affecting the financial statement as a whole, and I got the audit evidence to prove it. It is an adverse opinion. I have to give an opinion. What opinion I will give? I will give an adverse opinion. Speak it like you are actually angry. Adverse opinion. Speak it with me. Adverse opinion. Yes. And when you know that there is a material misstatement, whether you got the audit evidence or not doesn't matter, but it is not related to the financial statement as a whole, you will use a nicer term called qualified opinion. I'm just qualifying my report. And when impact is material, pervasive, and you don't have any audit evidence, then you will not give an opinion, and that I call disclaimer of opinion. Are these 3 opinions clear? Just tell me in the chat box yes or no. Are these 3 opinions clear to all of you? 1, 2, 3. Quickly tell me. If you want, you can also prepare this chart in your notebook fast. You can also prepare this chart in your notebook. Here only you can see and prepare the chart. Super clear. Great. Great, 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 great. Yes, sir. Chalo. And you want time to prepare this chart? Tell me. You want time to prepare this chart? If you want, I will give you the time. Don't worry. No, sir. We don't want time. Just move ahead. Wasting our time, sir. No, sir. Yes. Now, whom should I listen? The yes ones or the no ones? The yes ones, prepare it fast. The no ones, I will talk to them. So majority of essay 705 is also done here. Okay? With essay 200, we are covering a lot of topics, and one of the topics in essay 705 were the types of modified opinions. That topic is also done here. We'll quickly go through it when we do the essay 705. The ones who wanted time, please finish it fast and let me know, then we'll move forward. Quickly let me know. To move my chair. Yeah. Tell me. Done. Great. Over, sir. Great. Cool. Let's try to understand it now. So it says, what it says, let's just read and understand now. In all cases, when the reasonable assurance cannot be obtained, what does it try to convey by saying that the reasonable assurance cannot be obtained? Sir, what is the difference between unmodified and unqualified opinion? One and the same thing. Unmodified and unqualified opinion are one and the same thing. You call a picture super hit, you call it a blockbuster, that means a picture is good, right? So that's the one and the same thing. Similarly, you call it unqualified, unmodified, or a clean opinion, everything means that the financial statements are giving a true and a fair view. It's all fine. Got it? Yes, sir. Now let's understand this topic. Please now focus on this paragraph. Now you will understand it. In all cases, when the reasonable assurance cannot be obtained and qualified opinion is insufficient, what does it try to convey? Reasonable assurance can't be obtained. That means we are not able to collect the audit evidence. We are not able to collect the audit evidence. We are not able to form the conclusion. We are not able to form the conclusion. We are not able to form the opinion. And when we are not able to form the opinion, we are not getting the audit evidence. Plus, qualified opinion is insufficient. So when we are not getting the audit evidence, there are only two opinions possible. Either it is a qualified opinion or it is a disclaimer of opinion. So if the qualified opinion is sufficient, what we'll do? We'll offer a disclaimer of opinion, and this is what it is written here. For the purpose of reporting to intended user of financial statement, essays require that the auditor shall disclaim an opinion. That means he will not express an opinion, or he will withdraw from the engagement wherever such withdrawal is legally permitted. So what this line says, reasonable assurance can't be obtained. It says reasonable assurance can't be obtained. What do we understand? That audit evidence is, we are not able to get the audit evidence. If we are not able to get the sufficient and appropriate audit evidence, only two opinions are possible. Either it is qualified or it is a disclaimer. It says even qualified is insufficient. Then what is the other option left? Disclaimer. So either we disclaim an opinion or we leave the audit engagement if it is permitted as per the law and regulation. Is this paragraph clear? Right? Yes, sir. This paragraph is now clear. Now let's talk about applicable financial reporting framework. I have given you an insight about the financial reporting framework, FRF. That is nothing but, you can say, a framework which is providing us an insight on how the financial statement should be presented, how the P&L should be prepared, how the balance sheet has to be prepared. So financial reporting framework which is adopted by the management, and where appropriate TCWG in the preparation and presentation of financial statements, that is acceptable. So applicable financial reporting framework is what? The one which is adopted by the management, which is adopted by the TCWG, and it is acceptable considering the nature of the entity and the objective of financial statement that is required by law or regulation. A simple example can be non-for-profit organization. You all would have prepared the non-for-profit organization accounts when you were small kids in the time of CPT, class 12th, or maybe CA intermediate. I'm not sure if that was there in CA intermediate. When we used to prepare NPO accounts, we know that there was no P&L account. There was receipts and payment account, income and expenditure account, and that it was something different which is prepared for the for-profit entities. Like for-profit entities prepare statement of P&L, they prepare balance sheet, so they don't prepare receipts and payment account, right? So it depends a lot on the nature of entity, and the one which is applicable in case of a nature of entity is that applicable financial reporting framework. Just understand it. Now there are two types of FRF. One is the fair presentation framework and one is the compliance framework. The simple thing is, the name says it all. Sir, how can you say that the name says it all? Let me tell you. Compliance framework just says that you just have to comply with the financial reporting framework. Trust me, this is what it is trying to convey. Compliance framework just wants you to comply with the financial reporting framework with your closed eyes. So what do you mean by closed eyes? You are not thinking anything. You are not judging anything. Whatever the FRF says, you do it blindly. You follow the schedule 3 blindly. This is what compliance framework is. But sir, what is fair presentation framework? Fair presentation framework, as the name suggests, it says you can go to any extent to present the financial statements in a true and fair manner. What it says, that as the compliance framework says, you comply with the FRF. You start by complying with the FRF, you start by complying with the schedule 3, but if you feel that you want to add on something, you want to add on certain disclosure, you want to make some additions to the notes to accounts, you can do so, because it will provide a better insights to the user of financial statement. So you can add on. But now it's my simple question to you. When it comes to adding on, no one has any complaints. Everyone is accepts add-ons. Example, if you are traveling by a flight, you get an add-on meal. How do you feel? Sir, we feel very happy. We feel very delighted. You are traveling by a train, you get a free tea, you get a free samosa, you get a free patty. We feel very happy. So whenever it's talking about some add-ons for fair presentation, it's fine. But it also says that someone can ask, sir, if I feel that for fair presentation, I want to reduce certain disclosure, then it thinks. It says you can do so. I'm not being a hypocrite. The fair presentation framework. So it is the fair presentation framework which is talking. It says that I am not a hypocrite. When I say that you can add on something to present fairly the financial statement, I say that you can also reduce the disclosure. But that reduction should happen only and only in extremely rare circumstances. That should not be a regular thing. When it comes to adding on, it does not use these words in extremely rare circumstances. But when it comes to reducing the disclosure, it says only and only in extremely rare circumstances. Let's read it. So fair presentation framework and compliance framework. First, let's read compliance framework. Whatever was to be understood, I have told you. Let's just read it. The term compliance framework is used to refer to a FRF that requires compliance with the requirements of the framework but does not acknowledge one or two above. What are the one or two above? We'll understand it right now. Fair presentation framework says it refers to the FRF that requires compliance in the first stage. It also starts with compliance, but then it acknowledges the fact that to achieve the fair presentation, it may be necessary to provide the disclosure beyond those specifically required by the framework. Beyond those means you can actually do some additions of disclosures. It may be necessary to provide disclosures beyond means in addition to those which are specifically provided by the framework, or as I told you, we can add, so we can reduce also, but when it comes to reducing the disclosure, it has got something to say. It acknowledges explicitly that there may be it may be necessary for the management to depart from a requirement of a framework, but such departures are expected to be necessary only and only in what circumstances? Usual circumstances? The answer is no. Extremely rare circumstances. Got the point? Next time when someone says fair presentation framework, don't do like, I don't know. You know that it is just like compliance framework, but some additions can be done and some deletions can be done, but deletions only in extremely rare circumstances. That's it. Is the financial reporting framework point clear? Just tell me yes or no, because these are the key terms which we'll use for the next 30-35 days in our audit classes. And at that point of time, I don't want your blank faces. I just want you to be confident when we are talking about these terms. I don't want you to raise your questions. So what does this mean? What does that mean? Because we are going to take the things to a higher level, a better level, a more exam-oriented level. So at that point, I want you to be comfortable with these keywords. Right, sir. Now let's talk about financial statements, something which I don't think it should be even discussed at CA final level. But what do you think is a financial statement? It's just a structure which tells us about the financial position, the financial performance of the entity, the cash flows of the entity. So basically I am talking about balance sheet, P&L and cash flow statement. So it is a structured presentation of a historical financial statement. So always prepared for a past year. So historical financial information, related notes intended to communicate economic resources or obligations at a point in time, that is the balance sheet. Balance sheet is always created for a particular date, or the changes thereon for a period of time. Changes, I mean P&L account and cash flow statement within a financial reporting framework. Just a definition you need to understand, that's it. Right, sir? Got it. Now comes those charged with governance. What do we mean by those charged with governance? Those charged with governance are the ones which are sitting at the top level of an organization. The CEOs, the managing directors, the managers, key managerial persons. You must have studied that in law. Key managerial persons. These are those charged with governance. The management is accountable to them. You can say in audit, these are the ones who we will reach out in case management doesn't agree with our point of view. So every point in audit where the management is not agreeing with us as auditors, who will we complain to about the management? It will be those charged with governance. Management says we will not provide the information. We'll say okay, we are going to those charged with governance. Management say you can't do this. We'll say okay, we are going to those charged with governance. So those charged with governance are your, you can say, friend's mom. Your friend doesn't agree with you. What do you say? I will complain it to your mom. So those charged with governance are like the mom to the management. They are the parents of the management. In case the management is not agreeing with you, the management is disturbing you as an auditor, simple, go and complain to those charged with governance. As simple as it can get. So those charged with governance, talking about the definition, these are the persons or the organization who have the responsibility of overseeing the strategic direction of the entity. Where the entity goes, strategic decision makers of the entity, whom we know by the names of executive members, CEO, CFO and managing directors. They are responsible for the overall accountability of the entity, how the entity performs, because they are sitting at the top, seeing the direction, how the entity moves, and they know they are accountable for the entity. Basic meaning of those charged with governance. Again, a word which will be repeated again and again during this class. I hope you got this point. Yes, sir. Is everything clear? Whatever we studied on the first page till here, is everything clear? You want me to explain something again? Do tell me, do let me know. But whatever we have discussed till now, is everything clear till here? You can take a small water break. Just have some water and yeah, we'll continue. Super clear, sir. Yes, sir. Great, 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 great. Sir, any real life listed companies which have had a disclaimer of opinion? We'd have to research about it on Google. We have to Google about it. What have been the various listed companies in which a disclaimer had been there? Let's research about it sometime later. Cool. Whatever we have discussed here, is this everything clear? I hope these are not words to you, plain words. These are not plain words. Everything you have got the meaning, what it is trying to convey. Yes. Again, just for your understanding purpose, there is nothing that you need to learn here. All you need to do is understand what this essay is trying to convey you. Now let's talk about ethical requirements relating to audit of financial statements. So the basic ethical requirement that needs to be addressed is independence. As the chapter started, what's the name of the chapter? Essay 200, 200, 200, 00 means OO means overall objectives of whom? Independent auditor. Independent means independence not only of the mind, independence of the appearance. You have to show your objectivity. You don't have to work under the undue influence of any other person. You have to present an unbiased opinion related to the things. So the auditor will comply with the ethical requirements, including those pertaining to the independence. What does independence means? Independence of two things, not only of mind, but also of the appearance. So the way I conduct myself, it should not be such that I am linked to the management. There should not be any family person who is working in the management, because in case my own family member is a part of the management, it may be a conflict of interest for me. So not only in the mind, but also in the appearance, there should be independence. Plus, what is the importance of independence? It increases my integrity. What is integrity? Doing something with utmost honesty, straightforwardness, sincerity. That is integrity. What is objectivity? As I told you, unbiasedness, free from any prejudice, free from any undue influence, and maintain an attitude of professional skepticism. What do we mean by professional skepticism? This is the most interesting topic of essay 200. All your attention on this slide right now. In the next 5 minutes, I will complete this topic, and after this 5 minutes, you will be having a thorough understanding of what professional skepticism means, and you will be in a position to easily convey it to anyone in this world. Let's talk about it. Professional skepticism. What do we mean by it? Two words, professional and skepticism. Skepticism is derived from this word called skeptical. I'm skeptical about something. That means I doubt something. Is it right? Is it wrong? Is it too good to be true? Is there something which is hidden that I'm not able to understand? What I'm doing? I'm asking questions. It's a questioning mind. I'm skeptical. That means I'm asking questions. Second thing, I'm alert. I can't be the one who's always sleeping. I'm going to audit. I will do what my seniors have told. No, you have to be alert. I will tell you, during audit, I was walking through the corridors of one of the company. While walking through the corridors, I heard something that a senior manager was telling his junior that you claim so and so expenses and I will approve it. And out of those expenses amount, you just share something with me. Would I have been able to hear it had I not been alert? If I have not been alert, would I have been able to hear it? The answer is no. I would not have been able to hear it. So not only questioning mind, but you also have to maintain alertness. And not only alertness, whatever audit evidence that you get, you don't have to check it like someone who is very inexperienced. You have to look at, you have to go into depth, and you have to critically assess the audit evidence that you get. So there are three components of professional skepticism. First one is having a questioning mind. Second one is being alert. When you are alert to the circumstances, definitely you can get to know about misstatements that can result from fraud or error. And the third thing is, whatever audit evidence that you are getting, you are not accepting it as it is. You are critically examining the audit evidence. For example, you can get some vouchers, you can get some expense vouchers which can be bogus. Company may be providing you bogus expenditure vouchers, and whatever expenditure that they are doing, whatever money they are incurring for that expenditure, it may be going in their own pockets of the management. Right? We have heard about a lot of fraud cases in this regard. So, three areas that you need to keep in mind regarding professional skepticism. Speak with me: questioning mind, being alert to the conditions, and critical assessment of audit evidence. Speak again: questioning mind, being alert to the conditions that can indicate presence of misstatement, whether due to fraud or error, and whatever audit evidence that you are getting, you are critically examining the audit evidence. Sir, now comes the question, what are the different things towards which we have to maintain our alertness? What are the different areas where we have to maintain our alertness? The first thing is, you are getting an audit evidence which is contradicting the other audit evidence. For example, I am checking the bank balance. I am checking the bank balance. The bank balance as per the financial statements is, let's say, 1,000 rupees. The management shared their bank statement with me. The bank statement also said 1,000 rupees. But when I actually got the bank confirmation, the external bank confirmation, the independent bank confirmation directly from the bank, it said 100 rupees. 10 was missing. Now what do you think? Should I leave it as it is, or should I question? Should I question the management? What's the matter? Right? Getting the point? So when you are getting two contradictory audit evidence, that is the point you have to be alert to. And when you are getting two contradictory audit evidence, don't you think you have got some information? Don't you think you have got some information which brings into question the reliability of the management, the reliability of the other documents that you are getting, or the responses that you are getting from the management? The answer is yes. This is the second point that you have to remain alert to. First point was contradicting audit evidence. Contradicting audit evidence means now I can't rely on the management. It is bringing into question the reliability of other documents that the management is providing me, or the responses to the inquiries that I'm making to the management. Yes, sir. And what is this all indicating? These are the conditions which are indicating presence of fraud. Getting this feel? Management is trying to manipulate the things, and it is indicating fraud. And last but not the least, when such circumstances are present, do you think the usual audit procedures will work, or you would have to perform additional audit procedures? So we would have to perform additional audit procedures. So these are the circumstances that suggest the need for audit procedures in addition to those required by standards on auditing. So how this flows work? So the flow works like, what things we have to maintain our alertness to. So first thing we have to maintain our alertness is to contradicting audit evidence. Contradicting audit evidence. When I am getting a contradicting audit evidence, two things happen. First thing, it brings into question. What question? The question of reliability of the other documents. Right? Plus. Not only the reliability of other documents, the responses that I am getting to the inquiries I am making from the management. Second thing it is doing is indicating the circumstances of fraud. There is some circumstances of fraud which are present in the company. When the circumstances of fraud are present, I am questioning the reliability. Will the normal audit procedures work? The answer is no. The result of all this is that I may have to perform some additional audit procedures. Additional audit procedures apart from those which are required by standards on auditing. Are these 4 points clear? Are these 4 points clear? If these 4 points are clear, just draw this chart to get this mind mapping on what are the things we have to remain alert to. Contradicting audit evidence. What does contradicting audit evidence brings into question? It brings into question the reliability of other documents that I'm getting. The responses to the inquiries I'm making from the management. It looks like there is a fraud present, and when the fraud is present, I have to go a step further. I have to perform additional audit procedures other than those which are required by standards on auditing. Are these 4 points clear? Yes or no? Got the points? Clear, sir? Just draw it fast so that we can move ahead. So this is a mind map that you can have. You don't have to explicitly learn everything. You just have an understanding, a mind mapping. So this is working like this. If you know this, it becomes easy to remember. Clear, sir? Great. Can I move back to the book and get these notes off the table? Do let me know. Done. Great, 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 great. So you people are super fast, okay, when it comes to noting. Very happy for that. Now comes the last point. If I am maintaining professional skepticism, what does it reduce the risk? What risks are reduced if I am maintaining the professional skepticism? Just say this word after me. Just say this word after me. Sir, you are reducing the risk of we. Just call it after me. You will get it, what I am trying to convey. It reduces the risk of OOI. I call it we. Sir, we means first O is for overlooking unusual circumstances. Now you will not overlook the unusual circumstances. Whenever you see the unusual circumstances, you will delve deeper into it. You will get the details from the management. You will not overlook them. Second thing, you will not overgeneralize when you are forming the conclusions. Overgeneralizing means looking at everything with the same lens. You can't look at everything with the same lens. Some things may need a different perspective from you as an auditor. So you can't overgeneralize everything. You have to look at everything with a different perspective that it needs at that point of time. So what do we mean by we? Sir, weights and notes missed. Jay, I will show you. So overlooking, overgeneralizing when drawing conclusions from audit observations. And last one is using inappropriate assumptions. Sir, inappropriate assumptions regarding the NTE of audit procedures, yani nature, timing and extent of audit procedures and evaluating the result thereof. Sir, what is this NTE? NTE is like nature, timing and extent. I know there is one of a famous superstar in South known as Junior NTR. You have heard about him? Junior NTR. I think he was there in RRR. Right, sir? RRR, he was there. So as these NTR, we have to determine our NTE as an auditor. What is NTE? Nature, timing and extent of audit procedures. In simple words, how much efforts we have to put in to get the audit evidence. Those efforts are depicted by the nature, timing and extent of audit procedures. Got it, sir? So these are the three things where our risk gets reduced. I call them OOI, which is called we. Sir, we means overgeneralizing, overlooking unusual circumstances, overgeneralizing when drawing the conclusion, and I means not making inappropriate assumptions while determining the NTE of the audit procedures, nature, timing and extent of audit procedures. Got the point? So this is all about professional skepticism. What is professional skepticism? Three things: questioning mind, being alert. So do it like this: questioning mind, being alert, and critically examining the audit evidence that we have got in hand. So you have to just remember these three things: questioning mind, being alert, and critical examination of audit evidence. What are the four things that we have to be alert to? First of all, contradicting audit evidence. When the evidence contradicts, it brings into question the reliability of other documents. It can be indicative of fraud. When there is fraud, when we question the reliability of other documents, somewhere we have to perform additional audit procedures which are required by standards on auditing. So that's the mind map that we created. What risk does it reduce? It reduces the risk of we. Sir, what is we? Overlooking unusual circumstances, overgeneralizing when drawing the conclusions, and making inappropriate assumptions while determining the NTE. NTE means nature, timing, and extent of audit procedures. That's all about professional skepticism. Someone wanted to have a glimpse of the notes. Please note it fast, and then we'll move to the next topic. Please, a request from my side, if you feel I'm going too fast, do let me know, because this is something I would love to know from you, that whether the speed is fine or not. Responses to inquiry. Here I have written inquiry. Sorry for the bad handwriting. I'll write it again. It's given in the notes too, but still I'll write it for you. I understand that this is not the best way to write it. Inquiry. Right. Please complete it fast. Speed is perfect, sir. Sir, will these notes be shared in LMS? The answer is yes. These notes will be shared in your Google Drive after the end of the class. Speed is perfect. Completed, sir. Thank you. Okay, sir. Done. So now, till now, what we have discussed, let's have a quick recap. Essay 200. Essay 200, what did we discuss? Essay 200. So it talks about two things plus these 00 are O. O means overall objectives of independent auditor and conduct of audit. How? As per the standards on auditing. Then what is the overall objective of auditor? To obtain a reasonable assurance. Why not absolute assurance? Because of the inherent limitations of auditing. So reasonable assurance that the financial statements as a whole are free from material misstatements. And through this reasonable assurance, we will form an opinion that the financial statements have been prepared in all material respects as per the financial reporting framework. They have been prepared as per the financial reporting framework. Once we have formed our opinion, we will report it to the users of financial statement. In case we are not able to obtain the reasonable assurance and qualified opinion is not enough, that means we are not getting the audit evidence, qualified opinion is also not enough, what we'll do? We'll disclaim our opinion. But here it also says you can also disclaim your opinion or withdraw from the engagement if it is legally permitted. Next point. Talking about the definitions. So definitions, we talked about applicable FRF, simple enough to understand the financial reporting framework adopted by the management, and it is suitable as per the nature of entity. Two types of framework: fair presentation framework, compliance framework. Fair presentation says comply, but you can also put some additions or deletions. Deletions only in extremely rare circumstances. What are financial statements? A structured presentation of the entities, economic resources and obligation, resources, assets, obligations, liabilities, and the movement in the same throughout the period. Misstatement is a difference. Difference between what? Difference of ACPD. What is ACPD? Amount, classification, presentation and disclosure, which has been reported in the financial statements by the management and which should have been reported as per the applicable financial reporting framework. Now we talked about those charged with governance, sitting at the top, overseeing the strategic direction of the entity, where the entity is moving, and they are responsible for the overall accountability of the entity. Ethical requirement, simple, independent auditor. If he is independent, he has integrity, he has objectivity, simple. Professional skepticism, simple points, three things: questioning mind, alert. See, questioning mind, alert. Do it like this: questioning mind, alert. And once you are alert, you will critically examine the audit evidence. You can use these body movements to remember it. Once you understand skepticism, you are skeptical, you are questioning. So questioning mind, alert. Whenever you do this questioning mind, do this alert. So you'll remember that being alert to the conditions that can indicate misstatements. And last point is critical assessment of audit evidence. When we have to be alert, when we are seeing something contradicting. When we are seeing something contradicting, it raises a question about the reliability of other documents, responses to the inquiries can be indicative of fraud. When it is indicative of fraud, we perform additional audit procedures than required by SAs. Last point, it reduces the risk of UI. Sir, UI means overlooking, overgeneralizing and making inappropriate assumptions. Right, sir. Now let's talk about professional judgment. What do we mean by professional judgment? After the professional judgment, I will give you break. This is the last topic before the break. After this professional judgment part, I will give you a break, a short sweet break of 10 minutes, and after the break, we'll resume. So let's understand what's professional judgment. Before actually going through these points, just look at me and we'll try to make it out. Don't worry. Again, professional judgment. Judgment means I'm trying to judge something. I'm trying to form an opinion about something. What do you think would be the factors that will play a role in this? As a chartered accountant, what have I done actually to become a chartered accountant? I'll say two things. First of all, I have cleared my 3 examinations: CA Foundation, CA Intermediate and CA Final. These are the 3 levels that I have cleared before actually becoming or getting the degree of a chartered accountant. And one most important thing that I have done is getting the training during the 3 years of my articleship. So the application of these 2 things, the knowledge that I have gained, the training that I have gained, and overall experience that I have gained while performing my audit procedures, is called professional judgment. And this is what that's written. It makes sense? Yes, sir, it makes sense. So the application of relevant training. What do we mean by training? Your articleship, your knowledge that you are gaining right now during your whole CA course, and the experience. It's all an experience, right? Training, knowledge and experience within the context of auditing, accounting, and ethical standards so that you can make informed decisions. Your decisions should not be very naive. Your decision should not be like a 5-year-old boy or girl is taking. Your decisions should be informed decisions. They should have some logic to it. So that logical decisions that you are making as per the circumstances, that is all your professional judgment. It is as simple as it can get. And throughout audit, you will be making some professional judgments. For example, when it will come to computation of materiality and audit risk, you will make judgment. On the basis of audit risk, whatever audit procedures that you are performing, what I told you, NTE, remember NTE, nature, timing and extent of audit procedures, it will require professional judgment. If I perform the audit procedures, what do I get in return? What do I get in return? I get in return the audit evidence. So evaluating whether the audit evidence is sufficient and appropriate, it requires professional judgment. And then out of that audit evidence, when I'm drawing the conclusions, then it also requires an audit professional judgment. So that whole area, everything in audit requires a professional judgment. And one basic thing that also requires professional judgment is when I am judging the management's judgment. You're getting the chronology. So the management, while preparing the financial statements, is making its own judgment, and that judgment is also being judged by my own professional judgment. So my professional judgment is used to judge the management's judgment. So these are the points that are given here: materiality and audit risk. What is audit risk? What is materiality? Materiality we have already discussed. When an item is considered to be material, when it is expected to influence the economic decision of an informed investor. What is an audit risk? We'll discuss it after the break. Just have patience. Based on the audit risk, we design our audit procedures, nature, timing and extent of audit procedures. It requires professional judgment. What do we get after performing the audit procedures? What do we get? Satisfaction. S for satisfaction, S for sufficient and appropriate audit evidence. Simple. So we get sufficient and appropriate audit evidence and we evaluate whether it is sufficient, whether it is appropriate. That requires professional judgment. And when it comes to evaluating the management judgment, it requires professional judgment. And based on the audit evidence, what we draw conclusions. That also requires professional judgment. Are these points regarding professional judgment clear? It's all for your understanding. All for your understanding that what is professional judgment? It is an application of what you have learned. Your training, your knowledge, your experience with regard to auditing when you are making decisions regarding audit. Whatever the decisions that you make in audit, from start to end, materiality, risk of material misstatement, based on those risks, the nature of audit procedures. What do you get after audit procedures? Now you have to say it after me, theek hai? Now you are not naive. You are getting everything from me. You just have to speak it after me. Unless you are speaking, you are not going to realize that what you are learning or not. Again, materiality, risk of material misstatement. Based on the risk, you are determining the nature, timing and extent of audit procedures. From the audit procedures, what do you get? Audit evidence. So evaluating the sufficiency and appropriateness of audit evidence, you require professional judgment. From that audit evidence, what do you draw? Lucky draw. What do you draw? What do you draw? Conclusion. That requires professional judgment. And evaluating the management judgment also requires professional judgment. Are these points clear? Yes or no? I just want the answer. Are these points clear? If these points are clear, it's time for the break. Just go for a break, have some water, close your eyes, meditate, anything that you want to do, but just don't drain your energy. Don't delve into using your mobile phones. I know when you say ask someone to not do anything, it is the mind's basic instinct to do that something. So I will say, I will not tell you what not to do, but I can tell you, just take a washroom break, go to the washroom, wash your face, have some water, cool and calm down your mind, and we'll meet after 10 minutes and start with the other topics and finish this topic. I hope you are enjoying the class. Let's meet out after the break, and after the break, we'll have lots and lots of fun. Meet you guys after the break. 10 minutes break. Let's catch up after that.